Hi, this is Matthew Cratter from Trader University, and I just want to make a quick video for you guys. I've been getting a lot of questions about the stocks that I've been talking about and what's happening with the market as a whole. Because it appeared that I was getting quite bearish on the market, and yet we've been trading quite a few stocks from the long side. So I just want to tell you what I'm seeing right now in the stock market, and I hope you find this helpful. But in order to do that, we're going to have to take a quick look at how market indices are constructed, in particular the QQQs, which is this stock index. It's 100 large cap, mostly tech stocks. And let me just scroll in a little bit here. If we take a look at how this is constructed, the various stocks in it have different weighting. So for example, Microsoft is about 10%, 9.5% of the index. Apple's about the same, 9.6%. And then Amazon's another 9%, Facebook about 5%, Google about 5%. Now, apart from Microsoft, what you'll notice here is these four names are what's called FANG. Also, if we include Amazon and Netflix as well. And so what's been happening is because the QQQs are a market cap weighted index, these big names, these FANG names, have actually been weighing down the index as a whole. So if we take a look at the chart of the Qs, we can see that we're really struggling right here at the 200-day moving average and not making much headway. If we look at some of the underlying components like Apple, they are far below their 200-day moving average, which is the red line right here. But if we look at the market on an equal weighted basis, we'll see something different. So the QQQs, this is a market weighted index. But if we look at the QQQE as in Edward, as an equal weighted, we will see something entirely different. Now these are the same 100 stocks that are in the QQQs, but these are equal weighted. So each one is approximately 1% of the index. And you can see here that on this equal weighted basis, we're almost back to the market highs. And this gives you a much better idea of what's happening to the market as a whole. Obviously, the FANG stocks have been underperforming, but we've really seen good market breadth on this recovery. And that's one of the reasons I've turned so bullish in the last couple weeks. This shows very well that what's actually happening inside of the indices. And in particular, if we look at software stocks, we see a lot more strength. And that's why we've been trading names like Twilio, TWLO, Zendesk, Splunk, SPLK. Zendesk was ZEN, Salesforce, CRM. And actually Microsoft is back getting pretty close to its highs. It's certainly above its 200-day moving average right now. If you want to see an index of these, IGV is a good software index. This is the software sector ETF. If we look at that, we can see why these names like Twilio and Zendesk, Splunk, Salesforce that we've been trading have been doing so well, because these software stocks, especially enterprise software stocks, are really back at their highs. So that's why I've turned quite constructive on this market. It looks like we're going to have the 50-day moving average come right back up and cross back above the 200-day moving average. And so what I was trying to say is that I'm happy to trade a sector that is strong, like the enterprise software stocks, even though FANG itself is lagging. What we're seeing is kind of a classic market sector rotation, where people are selling out of FANG and they're moving into some of these new names that are not exactly household names, but they may become household names because as they continue to outperform. So just wanted to give you an idea of what I was thinking about in terms of market breadth and how that influences my take on where the market's going next. If you found this helpful and you'd like to see more videos like this, please subscribe to my channel. If you have any questions, leave them in the notes below, and happy to answer those. And please like this video as well if you liked it, so it can be shown to more people on YouTube. Thanks a lot for listening. I'll see you in the next video.